Hey guys, welcome back to the channel. Just a quick heads up. I've been out of the grind for the last couple of weeks, really because my folks have been in town, and so we don't get to hang out too much. So I've dedicated the last couple of weeks to putting in as much quality family time as I can. This will probably continue to the end of next week, to which point I will be back to the grind. But I wanted to keep you abreast of some of the conversations that I've continued to have with my network. And as many of you know, my network mainly lies within the VC space, within traditional finance. And with what we've seen recently going on with banks like Silicon Valley Bank, like Silvergate, Credit Suisse potentially shutting down, it's definitely provided a lot of avenues for conversation. And I think it's always important for us to keep an ear to the grindstone as to what these traditional finance folks and banks are thinking, which way the wind is blowing, and then do somewhat of a sentiment analysis to help plot a course for ourselves for success, certainly in the next bull cycle and beyond. So as I just mentioned, we've seen the dilution of Silicon Valley Bank and Silvergate and possibly Credit Suisse, like I say, and many others that are, potentially smaller institutions that are a lot more crypto friendly than, the central bank, for instance. So this is a bit of a blow on the surface. And this is, like I say, the tip of the iceberg. We're probably going to see a lot more of these smaller banks follow suit. And many of these smaller banks provided that bridge between traditional finance and crypto. We've seen a lot of companies, certainly with Silicon Valley Bank, who were hedging their assets along the way, fortunately, or unfortunately, I guess, whichever way you look at it. Meaning that, along the way, they've allocated some of their own assets to Ethereum, to Bitcoin, to other crypto plays, just because they wanted to stay ahead of inflation. Of course, they wanted to venture outside of simply having US dollars in the bank. And now, even though the institute that they were banking with in Silicon Valley Bank, for instance, has diluted, they are able to leverage some of the assets that they had to make sure that they're staying ahead of payroll. They're keeping themselves in business and they're still able to operate. Many companies have been doing this for quite some time. So it is a blow to crypto when, on the surface level at least, when you see some of those inroads, those direct bridges into cryptocurrency being shut down. The sentiment with the network, or my network that I've been speaking to, really is in the central bank trying to push forward the narrative of a CBDC, their central bank digital currency, of course. And so maybe the environment is being somewhat manipulated so that a lot of these smaller banks are being rolled up to take the autonomy away from the general populace, if you will. We'll probably see some bailing out as time goes on. A lot of the treasury pumping funds to save certain institutions, as we've seen before, which of course is going to pump up the inflation numbers. And ultimately it leads to an environment where the US dollar is losing more and more value. So it's a bit of a double-edged sword. While we are seeing the central bank manipulating an environment where they want to push forward their CBDC narrative, which of course you don't have to be a rocket scientist to see the totalitarian environment that could possibly create. It's taking away a lot of our autonomy and replacing it with control, which is the opposite of what a lot of us want to see within crypto. However, this is realized by a lot of the traditional finance heads out there. And so, not to be outdone or really constrained by the US, a lot of these entities, some of the biggest institutions in the world, as we've talked about before, are looking to creatively leverage and capitalize on what looks to be the next generation of finance. And that is revolving around things like tokenization and many other asset classes that we are yet to see come to fruition, but no doubt will. As we start seeing a lot of these institutions looking to leverage creatively, whether it's inside the US or outside of the US, it does no doubt mean a lot of capital being driven towards crypto. So to me, and to many of my network that I'm speaking with, it kind of looks like a perfect storm. While on the surface we're seeing some potential roadblocks to this big inflection of capital coming and entering into crypto, it kind of looks like a perfect storm in that everyone kind of sees the devaluation that's happening with the dollar and the potential short-lived reserve currency hedge that it's had over the previous decades. And so as we start seeing things moving to a much more autonomous and decentralized world, it means wonderful, wonderful things, in my opinion, for tokens like Pulse Chain. or Hex or PulseX or many of the other decentralized applicable currencies, let's say, anything that allows institutions to not only capitalize but control and have more autonomy over their assets, is going to see a lot of action coming. I don't care, what the SEC is saying. It looks like it's going the other direction. Rather than backing away from crypto, I think a lot of these institutions seem to be seeing the writing on the wall and going the opposite direction. And they're planning and scheming and wanting to capitalize in the crypto world as much as they possibly can, because ultimately it's not the US that seems to be leading the charge in the crypto front. They seem to be going about things a very different way, and I think they're going to be left behind. And that is the real risk that a lot of these institutions seem to be wanting to hedge against. One final thing, and I'll touch on all of this when I get back to the grind, just to make sure I'm putting more and more content out there to bring enlightenment to a lot of you guys, because I do think that it's easy to be manipulated by the media to a certain extent by reading that surface level messaging and kind of being scared away from an environment where we really should be continuing to be, or even more, being more so bullish than we have previously been. So it's definitely important to make sure you fully understand the ramifications of what's happening and also the opportunities that this presents. A final thing, I am considering putting together a Patreon or something like that really looks to shed some light, certainly into my thinking and how I'm planning my portfolio going forward. I'm not a financial advisor, so of course I have to be very careful with the wording here. I'm not ever going to be in a situation where I'm directly advising you what to do with your money, what to do with your assets, and how to play certainly this next bull cycle. But I am more than happy to give you as much transparency as possible into how I'm allocating my own assets into portfolios. The way I see this taking form is really twofold. One, a portfolio that is inclusive of a lot of less speculative plays. And now let me be clear. Less speculation doesn't necessarily mean less gains. It just means that I am more bullish, and it's my own personal opinion, but I am more bullish about making what I think are no-brainer plays going into this next bull cycle. So that's the first portfolio that I'll be looking to delegate, and compartmentalize my own assets into certain tokens, certain platforms, areas and opportunities that I see that should, like I say, be somewhat of a no-brainer as we go forward into this next bull cycle. I'm looking to set those positions as soon as possible. Then the second is going to be, somewhat of a more speculative portfolio. I'm still going to be vetting and doing a lot of due diligence into any project that I'm getting involved in, or giving transparency to you guys into what my allocation will be. But it will be more speculative, but also now positioning for, some of those monumental asset value increases, the 50 to 100 to 1,000x tokens out there, the gems, if you will. While it's more speculation, I think that, if you are going about your research, your due diligence, and your targeting of these tokens, there are opportunities that, should pay hand over fist if played the right way. Right now, I just want to really gauge interest. If you are interested in joining something like a Patreon, I don't know what format it's going to take yet or what platform I'm going to be utilizing, but if it is of interest to you and you do want to stay abreast of some of the new projects and platforms that I'm getting involved in, as well as my my portfolio allocation, let's say, going into this next bull cycle, and what that means in terms of, dollars and cents and percentages of assets right now, drop me an email right now. If you want to write me an email to benkayge@yahoo.com, put in the description, or the subject, portfolio, something like that, just so I can easily search and gauge anyone who is interested. I'm going to be crafting somewhat of a private email list from this. So I want to cap it. I don't want to have this be something that goes out to a ton of people right now. But what I am looking to do is make sure that anyone interested right now who is a part of this community, who wants to stay abreast of what I'm doing with my portfolio and some of the speculative and non-speculative plays that I'm making, I'm going to start positioning very, very shortly. And there are some projects that I've been looking at for a while, as well as some new ones that are no doubt going to come to the mix as things start heading into crypto summer, let's say. Shoot me an email. I'll leave the email address in the description as well, just so you have it and you can kind of copy and paste. Again, shoot me an email with the subject line saying portfolio. and then I'll look to compile a list and send out some private emails when this thing starts to take form. But right now, don't be put off by the media. Don't be manipulated. Right now, it looks like there's a lot of manipulation going on. The central banks are playing a heavy role in this, and some of the old traditional heads, the creative thinkers, are not falling for it, and you shouldn't either. Right now, we are in an age of transparency, in an age where information is not as hard or as difficult, really, as it ever has been to unearth. It is there if you look for it. And so I'm going to continue to make sure that I'm pumping out content here that helps shed as much enlightenment as I can to pull back the curtain on what some of these traditional banks, these institutions, the VCs, how they're looking to delegate their own money, their own assets, and what creative avenues they're looking to leverage to stay ahead of inflation, to stay ahead and hedge against some of the dangers right now that we're seeing within the economy, within the US dollar value in particular. And really how we stay ahead of everything so that we're not faced with a situation where our own wealth and our own value is devaluing as we go forward, because we're being manipulated into believing that certain things are going to come to fruition, or certain revenue channels and asset management avenues are less effective than they actually need to be. But I'm being redundant right now. Again, this comes from not putting out videos for a couple of weeks. I'm starting to ramble. But again, shoot me an email if you're interested. I'll start honing in on some of the content that I'm putting forward, really with a focus on making sure that you, the community here, is at least in the know with which way the wind is blowing and what we should be planning for. So I hope this helped, and I'll be back to the grind as soon as possible. Thank you.